Greetings. This video will be a basic tutorial on how to check the GDP growth rates of multiple countries at once and how to check them from a source that has a high degree of credibility and is updated very frequently. So we go to the Economist Magazine, which is economist.com, of course. We click on this search field and we search for markets and data. Markets and data. From there, you get to this link over here, Markets and Data, The Economist. And then from here, you can click on Indicators on the Move. Now, the website for The Economist magazine will only allow you to do this a couple times a week or whatever. If you sign up for a free subscription, you get more articles per week or per month or whatever, but you can figure out how often you want to do this. But we click on this Indicators on the Move field. And this is updated very often. And what's interesting here is you can see a number of countries as well as a block of countries like the Euro area, which is the Eurozone, known as the place that uses the Euro currency. And you can see things like 2021 and 2022 real GDP predictions. Now, I'm a fan of nominal GDP, not real GDP, as I explained in other videos. But since real GDP is what the world publishes for misguided reasons, that's what we're going to have to work with for now. Forget about this latest and quarterly numbers. Those numbers don't matter because that is too short term for any meaningful analysis. 2021, we're already in July of 2021, so that's not that interesting. What's really interesting is 2022 because the COVID crisis made the 2020 GDP of most countries very low, and 2021 was a springback because of all the monetary creation, money printing that was done, and that is going to continue to have an effect in 2022. Now, viewers of this channel know that monetary creation, money printing, has to be permanent and has to keep rising exponentially, but most of the world still refuses to accept that or doesn't understand why that is, and is still completely in fear of this hyperinflation narrative, which is absurd, because there is really no chance of hyperinflation even at current levels of printing. So the 2022 GDP metrics by country are what we want to look at here. The United States, 3.7%, quite good. China, 5.2%. The Euro area, which is a currency block that is as large as China's entire GDP approximately, 4.5%. That's very good because normally Europe has had very, very little economic growth for much of the last 15 years. And then we go down, you can see any country you want out of the 50 or so largest economies in the world and see what their GDP forecast is. I'm going to look at India, 7%, 2022. That is not very good for such a poor country when even the Euro area is expected to do 4.5%. If the Euro area is doing 4.5%, for India to do 7% is extremely poor. And the problem is a low-income country should be growing faster than that. And India was growing quickly for a number of years in the 2000s, but now has kind of hit a certain ceiling and can no longer muster high growth. And I have a video over here about how India never really was a high-growth economy and doesn't look like it ever will be one. It gets compared to China a lot, but I'd say that flatters India quite a bit. And what has happened here is because of the amount of money printing and the diffusion of more technology under atom principles, the advanced economies are again growing at a rate that, while not as fast as the emerging markets, the gap has been closed considerably. There was a time when advanced economies were growing only 2% a year and emerging markets were growing 7% a year, and it seemed like emerging markets were catching up. Well, that catch-up phenomenon has mostly ended because now you have advanced economies growing at 3.5 to 4.5% a year. Again, we look at the collection of advanced economies that comprise the United States, 3.7%, Japan, 2.9%, Euro area, 4.5%. China is a middle-income country, so we don't count it as an advanced economy, but it's not a low-income country either. And then the biggest low-income country, which is India, biggest in population for sure, obviously, but also the largest in GDP among countries that could still be considered low-income, only 7%. That doesn't comprise much of a narrowing of the gap or a catch-up. And that is how we see the technological economy manifesting, because the atom density of an advanced economy is much higher than of an impoverished low-tech economy like India. And the advanced economies can metabolize money printing into further productivity and wealth gains more easily than a poor country can. So this entire narrative of emerging markets catching up with the advanced economies was only a temporary phenomenon, and it seems that's not going to happen. Now, all of these economies are growing in absolute terms as well. If India grows at 7%, And even if that moderates down to 5%, it will eventually become a middle-income country for sure. And I say elsewhere in other videos how most world poverty will be gone by 2033. That's not very far away. That's only 12 years away. Most world poverty, as defined by today's standards of poverty, will be gone by 2033, with the exception of sub-Saharan Africa and a few pockets like that. But outside of that, most poverty will be gone, including in India. But emerging markets are no longer really catching up with the advanced economies because the atom principles of economics are more easily manifested in an advanced economy because they have more of a high-tech sector and more technology consumption among average people and more software-oriented processes. So that is one dimension of things to look at. And the other is consumer prices. We hear so much about inflation. 2021 expected inflation 3.1%. That is in fact a perfect level of inflation. It's neither high nor too low. Low inflation is equally bad and sometimes even worse than high inflation. In fact, you should watch this video about how deflation is in fact much worse than moderate to even moderately high inflation. But even China has very low inflation, plus 1.6%, an emerging market. Euro area, plus 1.8%. Japan is in deflation, as it often is, minus 0.2%, partly because it's probably the most technologically dense major economy in the world. So none of these countries are expecting inflation despite a huge amount of monetary creation. As you can see from this video that I have up here, Q2 of 2021, just that 3-month period, saw $1.1 trillion of money printing. On average, the world is doing $400 billion of ongoing money printing per month as we speak, and that's how much it has to do. That is in fact the correct amount relative to the 2021 level of the atom. By 2022, that number should be higher. In a few years' time, 1 trillion a month will be normal, and most of that will comprise wealth creation, not inflation, because it is merely offsetting technological deflation. These are points I speak about in other videos. This tutorial was to show you how to check country-by-country performance and to index all these countries with each other. Now, I don't know why this Economist table, which they update frequently, doesn't have a top row for the entire world. Why not list the whole world's GDP and the whole world's inflation in the top row and then countries as a subset of that below that? I don't know why they don't add that row. Maybe they should. But otherwise, this table is still extremely useful. You can look at whatever countries you're interested in. All of the 50 or so largest economies of the world are in fact included in this table. So I hope you found this tutorial to be educational and useful. And if you like this type of content, I encourage you to subscribe to this channel. Thank you very much for watching.